You're listening to Investor Insights Decoded, the podcast where our hosts, Michael Grant and Julia Foster, break down the most impactful memos from the world of investing. Today, we'll be exploring Howard Marks's memo, First Quarter Performance, written on 11th of April 1990. Let's dive into the timeless insights that continue to influence investors today. Ever feel like the market just, completely bonkers?
Yeah, I know what you mean.
Like 1 minute, it's all doom and gloom, everyone's freaking out.
Right.
And the next, it's like champagne and confetti everywhere, irrational exuberance.
Yeah, and that's the human side of it all, isn't it? It's like we're all just emotional creatures.
Yeah, totally. And speaking of emotional, that's why we're doing a deep dive today on, well, it's a memo, really, by Howard Marks, the investing legend.
Oh, yeah, I love Marx.
It's called Riding the Market Pendulum. He wrote it way back in 1991.
91, huh? See, that's Marx, though, right? His stuff, it's like timeless.
Right. Like he had a crystal ball or something back then.
Total Wall Street philosophy.
Okay, so pendulum, right. He uses that to describe the market, and I think it's a really powerful image.
Oh, it is. Because it gets at this truth we all know, but maybe don't say out loud. Markets. They swing between extremes.
So instead of this nice, predictable, like steady growth,
No?
we're on this roller coaster. Up, down, crazy highs, scary lows.
And the thing is, it's just like a pendulum, right? It doesn't want to hang out in the middle, that balanced place.
It's always got to be swinging to one extreme or the other.
Exactly. Always building up to that next big swing.
Okay, so let's unpack this pendulum idea a bit. What was happening back in 91 that made Marx write about this?
So the first quarter of 91, right? Market had a big upswing. Coming out of a slump, everyone's ecstatic.
Party time.
Exactly. But Marx, he's cautious, He's looking around and he's thinking, is this really justified?
So even when everyone else is euphoric, he's seeing those warning signs.
He's seeing that pendulum swinging way, way out. And he's worried.
Okay. But hold on, are you saying we can actually predict these swings? Like, is that even possible?
That's the million-dollar question, isn't it? If we could time the market perfectly...
It would all be on our yachts.
Exactly. But Marx, he's realistic. He knows we can't control those swings.
So are we just at the mercy of this market pendulum?
Not at all. We can't control the swings, but we can control how we react to them, right?
Yeah. Okay, that makes sense, I guess.
It's about recognizing those moments when the pendulum's nearing an extreme, and then we adjust accordingly.
Interesting. Okay, so how do we do that? How do we, spot those moments when it's about to swing back the other way?
Well, Marx, he points out two big traps we fall into, and they're all about, our emotions.
Fear and greed, right. The classic combo.
Bingo. See, when the market's on fire, everyone's making money, what happens?
Greed takes over, obviously.
Exactly. We don't want to miss out. We see our neighbors buying boats.
Oh, tell me about it. The FOMO is real. Suddenly, everyone's Warren Buffett.
Right. And that's when we get sloppy. Forget the risks, just pile into whatever's hot.
So we're basically chasing that pendulum as it's swinging higher.
Trying to jump off at the last second before...
It comes crashing down.
And it always does, right? Reality sets in, the music stops, and bam, fear's in charge now.
Cue the panic selling, everyone running for the exits.
Yeah, it's like the whole herd just stampedes. And fear, it can be just as blinding as greed.
People convince themselves this is it, the end of the world.
They sell at the worst possible moment. Lock in those losses, all because they're driven by fear.
Like jumping off the roller coaster mid-plunge.
Mm-hmm.
Not a good look.
Not at all. And this is where Mark says, hold on, we got to be smarter than that. Discipline, that's the key.
Tuning out the noise, not letting emotions call the shots.
Exactly. We got to recognize those extremes in ourselves first, right? Then we can make rational choices.
Okay, so be aware of our own biases. Got it. But how do we know when the market itself is out of whack? Like, prices are just wrong.
That's where this idea of value comes in. And remember, Marx isn't saying to time the market perfectly. That's impossible.
My goodness, I was getting stressed.
It's about recognizing when that pendulum swung so far that things are detached from reality.
Fair value, he calls it.
Fair value. I like the sound of that. But what's that mean, practically speaking?
Think of buying a house, right? You wouldn't pay double just because there's a bidding war going on.
No way. Same with stocks. Value investing is about cutting through the hype, the fear, and figuring out what something's actually worth.
So, it's real potential, not just the sticker price.
Exactly. It's like, what are its assets? What are its earnings? You got to do your homework.
So it's more than just, this company sounds cool, let's buy.
Way more. It's about finding those diamonds in the rough, the companies the market's mispriced, undervalued.
Because everyone else is too busy chasing the latest trend.
Right. This is where that deep dive mentality comes in handy. Cut through the noise, focus on what matters.
Be the detective, not the gambler.
Exactly. And yeah, that takes patience. Sometimes got to go against the grain, you know?
Which is tough when everyone else is bragging about their gains.
It is, but that's the thing, right? The market, it's not about getting rich quick. It's about building wealth over time.
And that takes a different mindset, for sure.
It does. It does.
It's weird when you think about it, right? We talk about the market like it's this thing out there.
This force of nature, yeah.
Exactly. But it's really just us, isn't it? All of us, our decisions, our emotions, they all feed into it.
That's it. That's it. Marx even says the pendulum, it's not some outside force moving it.
It's us. We're the ones making it swing.
And that's where things get really interesting, right? Because if we're the ones driving it,
Then we got to understand why we're swinging from fear to greed and back again.
self-awareness, that's key. Are we thinking clearly or just following the herd?
It's like if everyone else jumped off a bridge, would you? Just because everyone's buying or selling.
Doesn't make it the right move. Gotta have your own compass.
Okay, so big picture time for our listeners. How do we actually navigate this whole pendulum thing? Make smarter choices.
Plan, plan, plan. Can't stress that enough. What are your goals? What's your risk tolerance? Really gotta know that stuff.
So no more YOLOing into the latest meme stock.
Uh-huh. Probably for the best. Do your research. Know what you own and why you own it.
And it's okay to get help, right? Like, talk to a financial advisor if you need to.
Absolutely. They can help you build that plan tailored to you. I don't got to do this alone.
Right, right. Find what works, what helps you sleep at night. Because, yeah, investing, it's a journey, not a sprint.
Well said. There's going to be bumps, ups, downs, the whole roller coaster. But keep your eyes on the horizon, you know?
Man, this has been eye-opening. We've covered so much ground, it's almost hard to keep track.
It's a lot to digest, for sure. But the core of it, like Marx says, the more we get this whole cycle.
The better we'll be at riding it out.
Exactly. It's not about eliminating the swings. It's about navigating them wisely. And that, my friend, is a lifelong pursuit.
Ain't that the truth? Well, on that note, huge thanks to you. This has been fantastic.
Pleasure being here. Always love a good deep dive.
And to everyone listening, thanks for joining us. We'll catch you next time for another deep dive into the world of investing. Until then, happy investing.